Have you ever opened your bank account, looked at your Social Security deposit, and quietly wondered why it feels smaller than it should, even though nothing in your life has changed? Let me take a moment with you because this is something that quietly affects millions of seniors, often without warning. There is a built-in tax that has been reducing Social Security checks for years, and many people don't realize it's happening until they notice their deposit feels smaller than expected. If you've ever had that uneasy feeling that something doesn't quite add up, please know this: you are not imagining it, and you are certainly not alone. My name is Sara. For more than a decade, I've had the privilege of sitting across kitchen tables, listening to the concerns of American seniors, answering difficult questions, and helping people better understand how their retirement income really works. I care deeply about your peace of mind. You deserve calm explanations, clear language, and honest information without fear, without pressure, and without political noise. Today, I want to walk with you slowly and carefully through what many people call the so-called secret tax on Social Security. What it is, why it exists, who it affects, and how you can feel more prepared moving forward. My goal is not to scare you. It's to help you feel steadier, more informed, and more confident about the money you worked your entire life to earn. When Social Security was first created, it was never meant to feel confusing or discouraging. It was designed to be dependable, a promise. After decades of working, paying in, and contributing every paycheck, you would have a steady source of income in retirement, something you could count on. For most Americans, Social Security was not a gift. It was earned dollar by dollar, year after year, through honest work. That's why so many seniors feel frustrated when they learn that part of their Social Security benefit can be taxed. I hear the same question again and again. Sara, I already paid taxes on this money when I worked. Why am I being taxed again? And that question makes perfect sense. Every paycheck you earned had FICA taxes taken out. You did your part. Your employer did theirs. So when a portion of your monthly benefit is reduced by taxes, it can feel unfair. It can feel like the rules changed after you already played the game. If you felt surprised, disappointed, or even a little upset by this, those feelings are completely understandable. Millions of seniors across the country have had the same reaction, often discovering this only after retirement, when the numbers don't match what they expected. To understand why this happens, we need to gently step back in time. This issue didn't appear overnight. It slowly grew out of decisions made decades ago, decisions that were originally meant to affect only a small group of higher income retirees, but over time began reaching far beyond them. In the early 1980s, lawmakers were worried about the long-term health of the Social Security program. People were living longer, more Americans were retiring, and the system needed additional funding to continue supporting future generations. A commission was formed to study the problem, and one of the solutions they proposed was taxing a portion of Social Security benefits for retirees with higher incomes. At the time, this idea sounded reasonable and limited. Only retirees above certain income levels would be affected. The income thresholds were set at $25,000 for individuals and $32,000 for married couples. Back then, those amounts represented a comfortable retirement income. The understanding was that this tax would apply mainly to people who were considered well off, while most seniors would never be touched by it. Here's the detail that changed everything. Those income limits were never adjusted for inflation, not once. As the years passed, the cost of living rose, housing became more expensive, food costs increased, medical expenses climbed, wages changed, but those thresholds stayed frozen in time. Because of that, more and more ordinary retirees were quietly pulled into this tax category, not because they suddenly became wealthy, but simply because the value of a dollar changed. Teachers, nurses, factory workers, small business owners, people who worked hard, saved responsibly, and retired carefully began finding themselves affected by a rule that was never updated to reflect modern life. That's why this tax feels so hidden. It wasn't announced loudly. It didn't come with clear explanations. For many people, it showed up quietly in a smaller deposit or an unexpected tax bill. Now, let's talk about how this works in simple, practical terms, because the language around Social Security taxes can sound intimidating when it doesn't need to be. The government doesn't decide whether your Social Security is taxed based only on your benefit. Instead, they look at something called combined income. Think of combined income as the full picture of your money. It includes half of your Social Security benefits plus other income you may have. This can include wages from part-time work, pension income, withdrawals from retirement accounts like IRAs or 401ks, interest from savings, dividends from investments, and certain other sources. Once all of that is added together, it determines how much, if any, of your Social Security becomes taxable. If your combined income stays below the original limits, your benefits are usually not taxed at all. If it falls into the middle range, up to half of your Social Security may be taxable. And if it goes above the higher range, up to 85% of your benefit may be considered taxable income. This is an important point, and I want to say it gently and clearly. That does not mean the government takes 85% of your check. It means that up to 85% of your benefit is counted as income on your tax return and then taxed at your normal tax rate. It can still reduce what you get to keep, but understanding this removes a lot of unnecessary fear. Many seniors tell me they assumed only wealthy people paid taxes on Social Security. That was the original intention. Unfortunately, because those income limits never moved, many everyday retirees are now included. Once you understand the calculation, the mystery fades. And with clarity comes the ability to plan and prepare. For many people, this tax feels secret because no one ever explained it clearly ahead of time. You work for decades, you retire, and then another layer appears. Often it shows up during tax season or inside a smaller than expected deposit. It can feel like a quiet punch in the stomach. Life also changes in ways people don't expect. Many retirees take part-time work to stay comfortable. Others take larger withdrawals from savings as prices rise. Some receive pensions or investment income. These changes can quietly push combined income higher, triggering taxes without anyone realizing it in advance. This does not mean you did something wrong. It does not mean you failed to plan. It simply means the system didn't adjust as the world around you changed. Now, many people ask, why not just stop taxing Social Security altogether? On the surface, that sounds fair. These are earned benefits. But the reality is more complicated. Taxes collected on certain Social Security benefits help fund the program itself. That money supports current retirees, widows, disabled workers, and future beneficiaries. If that revenue disappeared overnight, the trust fund would run out sooner. That could mean deeper cuts earlier than expected. Understanding this doesn't erase the frustration, but it explains why the system works the way it does today. The real issue is balance, protecting seniors now while keeping the program alive for future generations. Knowing the bigger picture doesn't make the tax pleasant, but it helps explain why it exists. Now, for some reassurance, not everyone pays taxes on their Social Security. Many seniors who rely almost entirely on their benefit with little or no extra income do not owe federal taxes on it at all. If Social Security is your main source of income and you don't have significant withdrawals or earnings on top of it, you may fall into that group. The challenge is that circumstances can change. A part-time job, a larger withdrawal, selling investments, or receiving more pension income can quietly shift your situation. That's why awareness matters. not to create fear, but to prevent surprises. There are thoughtful ways seniors often reduce the impact of this tax. One common approach is timing. Instead of taking large withdrawals from retirement accounts in a single year, spreading them out over time can help keep combined income lower. Smaller, steady withdrawals may reduce how much of your Social Security becomes taxable. Working during retirement can also affect this. Staying active and earning extra income can be rewarding, but it's wise to understand how that income interacts with your benefits and taxes. The same goes for interest and dividends, which many people don't realize count as income on paper. This doesn't mean you should stop working or stop enjoying your savings. It simply means being intentional. And when things feel confusing, sitting down with a trusted tax professional can make a meaningful difference. Small decisions made calmly ahead of time can protect a great deal of peace later on. There's another simple habit I strongly encourage. Once a year, take a few minutes to review your earnings record at ssa.gov. Your Social Security benefit is calculated based on your highest earning years, and mistakes do happen. Wages can be misreported, records can be incomplete, and those errors can permanently lower your benefit if they're never corrected. I've seen seniors uncover missing or incorrect earnings and see their monthly benefit increase once those records were fixed. Sometimes the change is small, other times it's significant. Checking yearly protects a promise you funded for decades. I also want to address scams because confusion creates opportunity for dishonest people. No one from the government will call you unexpectedly to threaten your benefits, demand immediate payment, or promise special tax treatment. Real programs do not require fees, urgency, or secrecy. If someone pressures you, tells you not to speak with others, or promises guaranteed results, that is a clear warning sign. You have the right to pause, to verify, and to ask questions. Scammers rely on fear. You deserve safety and time. As we come to the end of this conversation, let's slow down for a moment. This is a heavy topic. We've talked about why Social Security sometimes feels smaller, how an old policy still affects everyday retirees, and why understanding combined income matters. We've talked about planning, reviewing records, and staying alert. If you feel a little more aware and a little less confused, I'm glad. You worked too hard to live in uncertainty. Even though we can't control every rule, we can control how informed we are. You earned these benefits. You paid into them your entire working life. You deserve clarity, respect, and truth. Take things one step at a time, stay informed, review your records, be thoughtful with income changes, and protect yourself from anyone offering shortcuts or guarantees. Retirement should be a season of steadiness, not constant guessing. And while the system can feel complicated, remember this: you are not powerless. Understanding how this tax works and how to plan around it puts you back in control. And that confidence can make all the difference.